compensated absences. So this goes along with the whole employer-related entries, liabilities. So compensated absences, vacation, sick pay, and these are things that happen that a company is going to expect to pay out. They happen this period, but the company expects that they'll have to pay them out sometime in the future. Yeah, they earned one period and paid the next. So they have to be accrued, recorded as liabilities, if the employee has already done the work, rendered the service. The obligation relates to items that accumulate or vest, so they have to be paid even if the employee leaves. Payment's probable, and you can reasonably estimate them. Okay, so what are we talking about, vest and accumulate? So I work here at Mass Bay. I get, I don't know, 14 sick days a year, and those vest. When I leave Mass Bay, they'll have to cut me a check for all of my unused sick days because they vest. They build up and they're mine whether I continue to work here or not. So that's the term vested. They go with the employee. The employee doesn't have to continue to work there to get them. Accumulate, some companies' sick days accumulate, but they're not vested. In other words, as long as I work here, I would get the sick days, but if I left, they wouldn't go with me. Okay? So that gives, you have to think about incentives here as an employer. If you have vested rights, then your employees are not as likely to take sick days because they'll say, oh, I'll get a nice big check when I leave. If they just accumulate but don't vest, you might as well use them or lose them, so you'll have a lot higher absentee rate. Anyway, possibly. So there's no check for the unused sick days if they just accumulate. Neither of the above. Mass Bay provides employees with 2 personal days that have to be taken, that can be taken each year, and these do not accumulate, they don't vest. You use them or lose them, and so most employees will take 2 personal days a year. I never miss classes for them. I'll take them to avoid other stuff. But, okay. All right, so let's take a look at the complications of this, because this, yeah, here we go. All right, so this is exercise 13.3. And this is really kind of an awful problem, but we'll just go through it fairly quickly. The company just began its operations. It's got 9 employees. They work 8 hours a day. Each employee gets 10 paid vacation days, and they can take them the year after they're earned. Sick days can be taken as soon as they are earned, and unused sick days accumulate but do not vest. All right. So the company accrues costs of compensated absences and accrued sick pay at the rates of pay in effect when they're earned, which is what they know. They don't know what the rate is going to be the next year or the year after. So the sick days and vacation liabilities are accrued at the current pay rate. And then they'll be paid in the future at the future pay rate. And that's where the journal entries get a little complicated. Okay, so we've got, all right. So we've got all of this here. So let's look at this problem here. I have to rearrange it so it makes sense to me. And if you can figure out a better way to do it, let me know. So you've got your 2016, 2017, they're paying $10 an hour one year, 11 the next. So the vacation time earned in 2016 would be 8 hours times 9 employees times 10 vacation days times $10 an hour. So they have a total liability of 7,200 vacation days for 2016. The number of vacation days used was 0 because they can't take them till next year. Sick days earned in 2016 would be 8 hours times the 9 employees times the 6 sick days they earn at $10 an hour. So this is the total liability for the sick days. Now, 6 sick days used were 4. Okay, 4 days were used in 2016. So this would be the amount of sick days used. So let's look at the journal entries that go with this. You'd say salary and wage expense for the 72 $1,500 vacation that's owed. You'd go salary and wage expense and salary and wages payable for the sick days of the $4,320. And then you would reduce that and pay out the cash, because the cash was paid out for the sick days used. And that was all at that $10 rate an hour, because that all happened in 2016. Okay, so now 2017, let's see what happens here. You've got vacation time earned in 2017. Now we're using $11 an hour, so it's $79.20. Vacation time used in 2017, each employee took 9 vacation days. So this was the used. Whoops. Okay, so now this is where it gets a little complicated. We accrued in 2016 using the $10 rate. So 9 days times 10 times all these other numbers would give you, this is the amount that was accrued to cover those vacation days. So we've got an additional payroll expense of the $648 because the rate of pay changed, okay? And you do the same thing with the sick days. We did the total sick days earned in 2017, sick days used, and here's the unused from 2016 you have to account for, and the sick days earned in 2017. So you end up with additional salary expense of $144. Okay, so these are the journal entries that you would end up with here as a result of all of these transactions. Okay, so you can see where this is going to be an interesting problem to try and work out. Sometimes doing ledger accounts for all of these helps it make sense. Sometimes nothing makes sense. So let me know if you have questions. I'm always happy to help you out. Okay.